Welcome to our today's feature presentation, Trading and Investing in 2018. What we will show you here is how to prepare for the new year to come with your trading, how to operate and know where prices move, what to do when prices do not move, or how to prepare when they go the opposite way. Before we start, we want to make you aware of the risk in trading and that we are here as educators, not as broker-dealers or financial advisors. Trading and investing in 2018, our topic today. First and foremost, do you have a system to tell you when to buy or sell? How long to be in a trade? Because this will be crucial, and this was crucial in the past and will be crucial in the future. That's what trading is about, knowing when prices move, the direction they move to, how far they are expected to move, and also in what time frame. All of that we will consider and show you individual examples. On the other hand, you also need some strategies on hand because prepare if the market goes sideways, there's not much move to be expected while something always moves. However, you can work with strategies that we can teach you to still harvest money when the market's not going anywhere. And that's an important tool that we want to have if we stay at a high plateau where we're going to end this year. Yeah, and are you preferred of making gains if the market goes down? Because some of you carrying an IRA, so there's certain limitations to going short, but there's other methods that can be applied according to the law that you can still participate if the market tanks and goes opposite way, and also how to hedge and protect your assets. To help you and other subscribers to find trading opportunities, we developed what's called the Nevertheless Trading Alerts. In a very detailed day-by-day function, we always report where is what on the move, what moved late in the day, what moved throughout the day, what moved on a weekly perspective, on a monthly perspective, and with that, we tune trading opportunities and spell them out for you to follow. Let the chart tell where to buy and sell. With the Nevertheless Trading Alerts, we spell out the opportunity, but you somehow want to see on a price chart where is a start point, where is an end point, and how do I act with that? So let us zoom together a little bit into that chart so that we can read from the chart of what's going on. Yeah, and I'll take some of those parts. So you see, we spell out clearly defined price thresholds here. Buy above 42.58. That's a daily chart for Halliburton. Yeah, and with that, then we spell out target 1 and target 2. And when the price reaches our target 2 here of the Nevertheless Trading top line chart, we assume an 85% likelihood the price starts to halter, which it did, or retrace or reverse. So then it's easy at entry, you know your positive exits, and you also know your stops, because with that red line you could trail the stop, or that's where you set it from the get-go, and then follow through. And you see these situations repeat themselves. Here you had a short opportunity, but also at entry we spelled out how far it shall last, and exactly that's what it did. And so also we did it up here with a target 1, target 2, spelling out when to enter. And so now some of our subscribers rather get out of target 1, repeat and go into a new opportunity, and this is what we have the Nevertheless Trading Alerts for, informing you on a constant basis of what's going on. And with some of our systems, we also have the opportunity that you can scan intraday for opportunities that come your way, and you can take them right from there. But important, we believe that every trader should know at entry the exit and also the stop. Then you can put together a relation between risk and reward. And with that, you know if you trade with the odds in your favor. But we also formulate a time-based target where we say, look, this target 1 shall be reached after about 5 bars. The target 2 shall be reached at a maximum of 10 bars. If that doesn't substantiate, then it's time to leave the trade. With that, we are living up to clear-cut trade conditions. For example, the next candle has to surpass the set price threshold. So you saw we had a set price threshold in a price prior. Next candle has to take it out to the upside or to the downside, because only then we can be sure that other institutional investors take the same approach, trade in the same direction, and get us to our target. But that's not the only condition we want to live to. We also have a target 1 and 2, so spelling out where is the minimum target we want to get to, where is the maximum target. After this target, we assume an 85% likelihood that the trade will either halter, retrace, or reverse. Yeah? When you know that, you have a different ball game or trading game here on the chart. And with that also, as I said before, the maximum time. First target 5 bars, second target 10 bars. That's for nevertheless trading top line. We have others like trend catching where we are trading for 3 bars, a maximum of 4, then we close the trade. So always clear cut condition at entry, at exit, at stop, and at time. And we are applying specific option strategies so that we can help you to protect and leverage situations and trades, and also help an IRA holder to go directionally in each direction, whatever the market takes, without infringing the rules of an IRA account. We showed you first the daily chart, and so the key question is, does that work for other time frames too, or is it bound to daily charts? No, it's not bound to daily charts, and I'll give you some examples of how it works on other time frames. What you see here is a never lost trading top line chart for the E-mini S&P 500 futures index, and we are trading on a 1 hour time scale. So every bar is representing 1 hour, or every candle. And you see again, we have clearly formulated price thresholds and we have our targets. And you see what happened after we reached the target. Then we had a turnaround and another trading opportunity. And again, we spelled out our target 1 and our target 2, and we better did so because you see exactly after reaching target 2, then the ES took a little dive to the downside, mostly taking out your stop if you didn't know how far to trade. And if you want to trail your stop, the red line would be your helping line, but often we keep our stop at bay, and the red line helps us to know where to best put the stop, so being outside of the range of volatility and bringing our trade home. So at every point we measure how far a price move shall reach. So here is 3.6, so 3.5 points on the S&P 500. That was the minimum target, and double would be 7 points. So we're not trading for very small little things. We're trading for meaningful price distances at a meaningful risk. Another example for the E-mini S&P 500 futures index. So here we recorded that on December 11, 12, and we had 2 trading opportunities. And you see again, target 1, target 2 were spelled out right at the beginning of the trade. Yeah, next candle ticked it out, bringing it home, and then in the continuation of the trade, we were having another opportunity reaching into the next day. And the moment we reached our goal, then the market or the price development got a little shady. And you see the good thing is here, in such areas, you're not getting signals to the up or downside. There is no signal on it because direction wasn't clear. We want to trade at strong directional price moves, know our targets in advance, and also we want to understand where is our stop level if we want to trail it with that red line, or where we want to put the initial stop at the get-go to move to target 1 and to target 2. With the help of our systems, we are supporting our subscribers in finding direction, up or down, specifying time in the trade. You saw some have 3 bars or 4 bars, others have 5 to 10, depending on what system you use, your entry and your stop, and surely your exit. And when you put that in relation, you have a clear-cut idea between risk and reward. The only thing which you need is the probability to success, but also that we record because we have high probability seekers that look at the underlying structure of the market and changes of the underlying structure, and with that portray forward what will be the most probable happening. With that, we come to high probability trading, and high probability trading is when we can predict the future of a price move at or above 65% likelihood. So that means 65% of the time we indicate in a pre-stage of the move where it might lead to, how far it shall lead, and in what time frame. And with that, we are filtering our signal from noise because you don't want to be in trades that go nowhere. We want to trade when prices move, and we want to do that continuously. And we'll have indicators, watch list indicators, scanners that help you to spot and follow those opportunities right from your chart, right from your system. Basic trading systems are very past oriented, and they look at opportunities like here when some lines are crossing or going over, so you go long here and then you get taken out here, even so you were right. In a continuation of that trend will help you to trade at pre-stages of those moves for predefined directions and help you to put your risk and reward in relation. Yeah. So with that, we are not past oriented as those systems are. We look at the price move of now. Yeah. And typical past oriented system, they already tell you moving averages. They take the past in relation to today. And if that could work out and be easy, then everybody would be rich making money trading. That's not the case. So you have to ask yourself why. By our tests, those systems had a positive expectation between 51 and 54%, but that's not good enough for a retail trader to bank money on the long run. So with that, what we do is much more as of a seismic measure. So we are measuring the pre-stage of an eruption because there's some indicating preceding, pre-leading price actions that we can measure. And then with that portray how far they shall reach, in what time frame, and also relate to it where are we outside the natural volatility of a price move so that we don't get stopped and then the price continues in the direction that we had assumed it. I hope we were able to inspire you with that. And what we do here is we teach one-on-one. We want to give justice to you as a person, to your individual wants and needs, and focus on that and tailor make our systems to you, what you want to reach as a day trader, as a swing trader, a long-term investor, or doing combinations of, because we build together a business plan for trading success, and you learn everything one-on-one at your best available days and at your best available times. And that business plan shall contain how to prepare for your trading, how to act at certain points, how to protect the trade when it goes wrong, and afterwards also build up a financial plan so that you see what comes out of your trading activity. And we always focus on at or above 65% accuracy within predicting the future with clear-cut entries, exits, stop or adjustment levels. The name never loss trading comes from never stop loss trading, but it was a little bit lengthy. So with that, we help you to repair trades that go the opposite direction and still bring them either to very minimal loss or turn a loser into a winner. We run some year-end specials for our basic system, which is called tradecolors.com. So you trade on a 2-candle color move, put on the chart, but also we have a very special going on in wealth building and income generation, a 2-for-1 deal, and also on never loss trading top line. Never loss trading top line, the top of the line. So you saw in some of the charts how that works. We have a spelled out price threshold, we have clear-cut settings of targets, and we follow through on those. Yeah, all of that will put on in the system on you and teach you one-on-one. So what does it mean in the system? So everything is server-based installed software. So when you buy a new computer, it's going to be there. It's real-time data from the data feed without additional fees. You have clear-cut entries and exit stops so that you know from the get-go where to enter, where to exit, and how to proceed with the trade over time. We help you to do position sizing so that you don't over-leverage on certain positions because money management is crucial to trading success. With that, we also define the time in the trade. Here you saw 3 to 4 bars, 5 to 10 bars, depending on the system. And we do risk handling. Yeah, so risk is what we need to take care of. Sounds more simple than it is, but every trading firm has a clear-cut risk management, helping the traders to stay in tune with the guidelines. And that all is going to come together in a written business plan for trading success, where we help you to formulate your guideline for the future in trading as a day trader, a swing trader, or long-term investor. If you liked what you see, we offer you a free consulting hour with us where you can call the symbols and the time frames and we count together how the system performed within reaching the goals. And so with that, call us at 866-455-4520 or write an email to contact@neverlosstrading.com. We thank you for your attention and we are looking forward for hearing back from you. Bye-bye.